Well, we may be out of earnings season, but we got movers. The analysts stepping up big time with calls here this morning. We got Apple downgrade, Amazon downgrade, battling analysts on Netflix where one analyst upgrading, the other analyst downgrading. We got another hurricane coming to Florida, Tampa, looking like it could take a direct hit. Lots to talk about here. Pre-market prep. We're going to stay away from the sports. Let's go.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
So, here we go. I did the intro. I forgot I was supposed to do the S&P coverage. Now
No,
we're bringing
that's
Joel.
okay. I'll do it.
We're going to bring in the birthday boy who is aging.
Let's talk about that in a second.
One more year. Okay. He wants to do the spooze first. It's his birthday, so, well, it was his birthday.
No, it's not my birthday.
On the weekend.
You missed it.
I missed it. I know. I did.
All right. S&P's down 25 and a quarter, 57.75. The Bucks in the red, 3.5 cents. TLT flat, down 9 cents, 95.46. Crude catching a bid, up $1.42. Gold up 9.20, 26.77. Silver going the opposite way, down 23 cents at 32.17. And Bitcoin futures are up $455.
So that's your rundown. Joel did have a birthday on the weekend, so we will wish him a belated happy birthday here from the chat. And then obviously we've got lots of other things.
Can I just say one thing? Can I say one thing about my birthday?
Yeah.
I had a very good day, right? I was treated well. We're not going to talk about the sports and everything. And I had a pretty good, good things happen the year. But in all honesty, this had to be the worst year of my life. And I think you all know what I'm talking about, what's transpired in the last year and what continues to transpire in our country and across the globe. Hopefully, somehow, this will come to an end, but there's no end in sight. But I just had to say it on this day, the 1-year anniversary of the attack on Israel, where I lost thousands of relatives, and now many more are under duress as we speak. So you got to call spade in the markets, but just want to let you guys know where I stand on things.
The war continues, and we need to find a way to stop these wars because people obviously dying. The Ukraine situation has been going on for 2 years here now, and this Israel-Palestine situation is not going away anytime soon. So we need to find a way to end the war. It doesn't look like, to your point, though, Joel, that it's ending anytime soon. It feels like it's escalating even more. I mean, we can see even in the markets, the reason the oil continues to go higher is war escalations, tensions in the Middle East. I mean, oil is up significantly here in the last couple of weeks. And it's we often get caught up in the markets, obviously talking, well, what does this benefit? How do we make money from this? And we forget about that loss of life. And that's really where, we need to, stop and think every once in a while. And sometimes it's not about money. It's not about making markets and, making money in the market because of events. It's really about loss of life. And, that hurricane situation, same thing that's going to happen Wednesday.
Yep.
Yeah, we could come in and talk about the hurricane trade, which probably goes on. We can talk about how you can make money from it. But really, when you're doing that, keep thinking about, the situation these people are in. They get devastated by a hurricane a week and a half ago, and now another one coming in the same direction here. So a lot of people, having a really rough time here right now. So if you're out there and you're doing well, try to help those people in whatever way you can.
Yep. And it's all people. It's just not, there's a lot of things going on in our country today. It's not just the anti-Semitism. There's a lot of discrimination and stuff. So everyone try and do your part to put an end to it. But that's it. No sports. You got geopolitics instead. So let's move on to the markets.
And we got a green screen for AB. He is here. He's having camera problems. He had camera problems a few weeks ago. The green screen of death is back again there. But we do have you, AB. You're on mute in the background, so you can unmute yourself and say hi. Even though we can't see you, we know you're here.
I am here. Hope everyone had a great weekend. And yeah, like you said, Dennis, we've had this issue before. We got it fixed, so I'm confident we will get it fixed again. But right now, we did not have it fixed before the show, and the show must go on. So we are here. Let's start, I guess, and we could break down last Friday's action, kind of where we stand going into this week. We do have some economic data on the way this week. None today. But we do have a big inflation report come in toward the end of the week on Thursday. That's October 10th. We'll get a CPI report.
What a day that's going to be.
Oh, wait, hold on. I'm getting
I think
taken.
earlier.
Oh no, it is October 10th, but I'm getting taken over. You guys can't see what's going on right now, but someone's remote controlling my computer right now to try to fix my camera issue. So I have no control over
Look
what's
at the
going on right now.
technology we have. Your tech guy is right in there and just takes over your controls of your computer, and it's going to get fixed here as we speak. So that's
See what's going on. Like my mouse is moving all around the screen. Different windows are popping up. I can't see you guys anymore. But all right, should we start with the
at least AB is green today. That was funny,
today,
AJ.
yeah,
I actually laughed out loud.
Uh,
Get a smile on Joe.
all right,
Try to get a
let's-
smile on Joel's face too. So
Well,
that's
let's
good.
start with a headline we got over the weekend. A little activist investor coming in to Pfizer here, Starboard. I had the info up, but I can't see it on my computer right now. So what were the
your
exact
computer's being taken over.
well, what were the exact details there, Dennis?
Starboard taking, I believe, a $1 billion stake, I'm guessing, because I forgot the headline too. Yeah, $1 billion stake in Pfizer. We know when Starboard gets involved, the market often listens. Pfizer has been in the doldrums and a dog for a long time. I know this gets in my long-term portfolio, and it's been a really crappy one. It's a good one for years. It's just been really crappy here the last couple of years. Obviously, at the COVID bubble, and that has burst. But now you're back to like 8-9 year lows. Dividend is attractive at 5.71%, but they've lost their way. So I applaud the activism to maybe get them back on their way. We need them to go over and take over VKTX. That would be good. I don't know if that's going to happen, but maybe that's what they need to do to get some growth in there. I mean, here they are, they're so lost in their little COVID bubble here that they've lost the will to like compete with other, and move on. We need to get Pfizer doing other things. They've missed this weight loss drug thing the whole time. Them and Merck have just been sitting around while Lilly is just printing money from it. So they need to do something. So hopefully Starboard shakes them up a little bit.
How carried away did they get last night on this, Dennis? I saw you tweet about it, and I was wondering, if did you get some 30 prints in there?
No,
or
I
was-
never did see that. When I was
Okay.
trading it last night, I logged in fairly quickly. It was trading right around where it is now. They had it up pretty quick. I don't know, maybe on the initial spike on Robinhood. Again, I don't have Robinhood, I have IB, but they're the same market maker. So you see similar markets there. I was seeing 29.50. That's where I was really seeing. And again, where we were
Okay.
even pre-market here this morning. So it's kind of been in here. It's a huge stock. I think it's not like it's a small company where it's going to pop 7, 8, 10% on this. I don't think that's going to happen. But it's getting a nice little pop this morning. Something to consider is the beaten down drug names have shown some life lately. We know Gilead, who's actually getting an upgrade here today as well, has really come back a long ways. My Bristol Myers has really been moving here too. So it's a little bit of a value market right now. We've seen obviously the oil stocks coming back. So the market's starting to look, a little bit more value here. Pfizer fits that bill, but is it a value trap? I guess that's to be determined. I hope Starboard can shake them up though.
It popped into a nice area of resistance here. I mean, this is like the average daily move. You got to keep things into consideration when you get these kind of moves that, what's the stock do on a normal situation? You got up to 29.69. That stands as your pre-market high. And look at all these pesky highs you have here between 29.50 and 29.60. So watch for that area of resistance. If not, perhaps it could open up to 30. I don't know if you have to chase this. The top of yesterday's range is way down at 28.59. I think Toronto Dave made a good comment here. An activist help a pharma company. I mean, they need some new drugs. They need, that. I don't know, whatever the management style is.
I think they should be a target to go buy one of the other companies there.
Yeah,
and
for
we know
growth.
VKTX has been a target. I think a lot of them are waiting on this, Joel, because we get data third, and obviously in the third phase there. We get that coming in November for VKTX. So I don't wonder if they're
Okay.
waiting to see, like making sure before we go make a bet at a company like VKTX, let's damn well make sure that the drug is as good as we think it is. So why, at this point in time, why would they not wait for the November data? So I think I think honestly in the VKTX, and I'm long VKTX, full disclosure, I just recently rebought it at 62 on the dip because I do eventually think somebody may buy this, but it does depend on the data. I mean, if the data comes out in phase 3 is bad, the stocks can fall 30%, 40%, 50%, just like that. So it is still a SPAC, but so far so good. See what phase 3 data looks like in November, and then that may dictate whether we're going to get some M&A action or people coming and talking about this a little bit more as a target for a Pfizer or a Merck or somebody else who has missed the complete run here on the obesity green money train.
Boy, someone really stepped up in this stock at the $61 area. That's your super extra major support. That was a big
Me?
boy. Yeah, that was
I
a
wasn't a
big
big boy, though.
boy. That was a big boy stepping in there. So if you're looking for a level on the downside, either to perhaps pick it up on a retreat or, let loose if it breaks that area, that they stepped up there. I don't even think I've seen it. Look, I mean, you had it back in July, a similar formation. You had the similar formation back in June. So that's good. It looks like they're loading up for that November data, but that's a look at VKTX.
All right, well, let's keep it ticking here. We have you mentioned it on the hop, Dennis, but there is another hurricane coming in, Hurricane Milton now after Hurricane Helene. This one is set to hit Tampa Bay. It looks a little smaller when you see it on the map, but I've seen a lot of experts saying even though it's a little bit smaller, it's supposed to be very strong. Which the reason we're bringing it up is the hurricane trade on. Are the usual suspects running? Your Generac, your who else is on your list of hurricane stocks, Dennis?
And again, we don't know. It's still Wednesday. They're saying the hit, so there's a couple days here. But people were talking about it on the weekend. I've got to think the hurricane trade probably starts here. Full disclosure: I just picked up Generac last night. So I'm long GNRC now, planning on holding it for the next couple of days because these things do tend to move with the hurricanes, and it doesn't look like it's going to be, we hope for the best here. Like we obviously hope that, and again, my father-in-law has a place down there in Gulfport. It got really, he's in a condo, so he's on the 10th floor, but his building had water coming in. All the bars that we went to down there, and I've been down there multiple times, we're underwater too. You just don't want to see this happen again. So you hope it misses. But unfortunately here, it looks at this time where Tampa could potentially, we don't know again, stuff can change. You hope it goes wide, but it looks like Tampa could take a direct hit on this. Now they're saying it is going to probably be less stronger than Helene, but because Tampa didn't take a direct hit last time, there could actually end up being more damage here in the water. Even if it hits as a 2, the ocean levels come up and, stuff starts getting flooded. My father-in-law had a boat just leaning against his building. A sailboat literally was leaning against his building. So just terrible. What some people are going through right now. What that town is going through. And, obviously, Joel's talking about, the Israel situation as well. There's some people really suffering here right now. So it's hard, and you try to separate it. And obviously, Generac is probably a stock that's going to benefit from this, but so many people suffering.
Two things here. One, you got a 5-star level here, Dennis, to keep an eye on. Look at this 162 level. Had 4 highs. The last 4 consecutive highs were in that area. You haven't reached that level yet, but man, oh man, that is a really good level to keep an eye on. Only 5,000 shares have traded, but keep an eye on 162. Dennis, you're probably the only one that's going to be interested in this, but and then the other bright traders. I reached out to Eddie Franco over the weekend.
Oh, Eddie.
One of the founders of Bright Trading, and he lives in Asheville. And he was out of town, and his house did not get hit, but basically he can't get to his house. That the roads are major constructions, and he is under evacuation orders until spring of 2025.
Really?
Yeah.
It's that bad.
He's gonna try and get to his house to get some things that he needs. And then he's
Wow.
gonna have to evacuation orders. So but just
Wow.
a shout out to Eddie Franco, one of the
Yeah,
founders
Eddie
of
was
Bright
great.
Trading.
We learned so much from Eddie too. Bob Bright, Eddie Franco founded Bright Trading back in 1993. Obviously, I spent 22 years with Bright Trading, so Eddie was great. Do we know Rob was okay in Naples? How was Naples? Naples was okay on the last one?
I've been texting with him a little bit. He did not say anything.
Yeah, and our good friend Fari Hamzy too is down there in Naples too. So
Yeah.
obviously we got lots of friends down
Got a
here
lot
that are
going
affected.
on.
There's a lot going on, people, and hopefully, this doesn't do as much damage as the last one. So we'll keep an eye on that. Pray for those people if you can. Let's go to the ratings parade here because AB, you're in the background because you're trying to fix your camera right now, but I can take over for a minute.
I'm here still. I just have the camera off.
Okay. We have a lot of ratings here today. A ton, and some big names here. I'm probably going to start with probably the one that everybody is talking about this morning is Apple. Apple, it's Jefferies. They dropped coverage of the stock because they probably were switching analysts, and then they've reassumed coverage at a hold, and they had a buy on it before. So that's a technical downgrade here. So Jefferies assuming the coverage of Apple and then downgrading it to hold. Apple is trading down $2 in the pre-market. Full disclosure, I do have a small short position on Apple. I've covered most of it this morning. I actually initiated it last night. Just it was an overnight trade off the rating, and I've covered most of it. I have a small position left.
It's come back a little bit this morning too. It looks like it dropped, got down to around like 223. It's came back up a buck or so. But yeah, so Jeffrey says too high iPhone expectations. They said the expectations for the new iPhone are too high. I think it'll take some time to see, I guess, like all the demand for the new iPhone 16 with Apple Intelligence. Are people really going out and buying that many of them? I mean, we've had some kind of mixed signals where some people have said the demand is really strong. Some people have said it's pretty light. So I think around like the holiday time, because a lot of people get the new phone for the holidays. So we shall see here. But Apple, like you said, down 1% right now, $2.30, but it's come back a little bit this morning.
Yeah, found support where you think it would in the pre-market trading. The news comes out, the 4 a.m. traders anxious to get things going. The spoos.
How low did it get?
223.
Yeah, I didn't get it down there. I was
No,
covering.
I've
been covering. I had quite a bit of shares. I was covering 223.74. I'm just looking at the buys this morning.
Yeah,
223.80, 223.85, 223.85, 223.78, 223.81. Just slowly trying to bring it in. Still have a little piece there. It's bounced enough now where I might actually I liked it in the 223s. Up there at 224. I don't feel like covering it as much here right now.
Yeah,
so I have a very small. I've covered 80% of the position.
You would have had to get up pretty early.
Too early for me.
515 was the low, and then after it hit that, you can see someone up their target. Oh, I can't get 223. I'm working the 23 handle. And then Dennis finally gets out of bed at like 7:30, and it's trading at 223.70. But there, you had a concentrated buyer in a 223 handle. Perhaps if the spoos, if the market holds in, if we do this choppiness, I expect that to be support as well. And you are even trading above Friday's low as we speak. That was at 224.13. So there's some level. But here we are again. Let's pick on Apple. Let's say they're not going to buy as many iPhones. Let's everybody downgrade it. And then everyone buys the same amount of iPhones. And then they rip the stock. I mean, it's like you've seen
it goes
this
down on a headline and then just goes up when there's lack of headlines. It doesn't seem like there's sustained selling. So it's like take your money and run when you get the move down on the headline. And then, it seems to just lift. It's like this bottom is, again, I don't totally get it because I'm with, the chat saying it's overvalued. I lean on the short side on this thing sometimes from a trading perspective. I have no long-term perspective. I had Apple, I had Apple in my long-term portfolio for a decade. My average cost basis was $25. I finally sold the rest of it out at 180 because I thought it was fully valued. It was 26 times earnings, 27 times earnings, and it's expanded since then. This is none of this growth in Apple over the course of the last 5 years The only thing growing is really the share count going down, and that's how EPS is going up. But this has not been a revenue growth story. It's just been a cash cow. They make a lot of money. They bring the share count down, and that brings the EPS up. So this has all been about a buyback story coupled with valuation and multiple expansion. It's not just, until they come up with something else. I don't want to get back involved on the long side here. I'll trade it. I'm going to trade Apple every day. Opposite of Kramer, he says own Apple, don't trade it. Right now, I say trade Apple, don't own it.
Just real quick, going back to the hurricane trade, someone just made a stock that we really don't throw in that group that much.
Sure.
Caterpillar. You're going to need some generators and some
Yeah.
big old machinery down there, right?
Yeah.
If they don't
Clean
have
up.
it. Yeah, there's a stock trading at all-time highs, down 99 cents, but we've never really grouped that in a hurricane trade. And then Deere, Deere is relatively close to all-time highs too. So
Dear
maybe
commentary from Trump on the weekend again, talking about his 200% tariff, whatever, it's not going to happen, but he's talking about, that anything coming from Mexico is getting that 200%. He was looking at Deere, mentioned again over the weekend because he had mentioned that a couple weeks ago at a rally. So I think Deere actually is trading down a little bit this morning on odd lots because maybe some people watching that. The hurricane trade at GNRC is the one you think about always. Again, full disclosure, I'm long GNRC. I'm gonna, again, it depends on a move. It moves up $7-8. You take the money and run. But I mean, at this point in time, I'm planning on holding it, trying to hold it for a couple days here. Lowe's, Home Depot. I'm long some Lowe's. Home Depot are natural cleanup stocks, so they often get a lift. Then you could go into I don't have this one, United Rentals. It was getting a little bit of a lift last time because obviously they sell a lot of things you need to rent, clean up. So those are stocks you think about, but I still think it's Generac. People think about GNRC. It is the one trade that people trade off of hurricanes.
Well, blew through 162 like it wasn't even there. We got a nice bid here. Just traded 163.
There's an analyst commentary too here on GNRC this morning. So OTR Global is rating this. OTR Global, smaller firm here, rating it, changing their reading up to positive. So, these firms all use different things.
Wow.
But they are positive. Their official rating is positive on GNRC. So
that just happened, huh? Interesting. Wow.
This morning. They probably see in the current, it's not just us as traders looking at, a hurricane coming in saying probably GNRC could get a lift off of this.
All right, let's keep the analyst, stay in analyst land real quick. And we do have a little an analyst battle in Netflix this morning. Because you had Barclays come in and downgrade Netflix to underweight, maintained a price target to $550 a share, which is well below where it's at right now at $715 a share. Meanwhile, Piper Sandler comes in and upgrades Netflix to overweight and raises the price target to $800 a share. So one downgrade and a $550 price target, one upgrade and $800 price target.
Wow.
Netflix is down $4.50 this morning, but that's only about 0.5% for Netflix with how big its stock is now.
The downgrade will always carry more weight than the upgrade, depending on if it's downgrade to hold, upgrade to buy that. But a downgrade to sell or underweight, same thing, will always carry more weight than an upgrade to buy. Because its sell ratings are not common on the street. It's not common for companies to come in and downgrade something to sell. So that gets, media attention. It gets notes. And so it's not surprising that Netflix is trading down despite the Piper upgrade here. So it's not about which firm is bigger. Piper probably has a better following than Barclays over here, but it doesn't matter because it's a downgrade to underweight, and that's going to take it's going to win probably, at least, in the initial trading of it. Now, what happens after that, who knows? But it's just interesting. We got, Netflix catching a downgrade, Apple catching a downgrade, and we're going to talk Amazon for a second because it's getting downgraded here too. Analysts are really a little bit nervous here, it seems like. Joel, what are your thoughts on Netflix? Tell us about the technical.
This is, well, first of all, are they canceling some shows? Have they had a rash of cancellations? Or did I thought I saw something in the chat or in social media? No? Okay. I mean, that could be a sign of cutting down on expenses. You got the drop, you got the pop. I mean, I think I would look at this from a longer term perspective and say, man, you're $15 away from 700. And you had multiple lows at the $700 area. So until you get a sustained break of 700 and turns from support into resistance, I still think the path to least resistance is higher. On the upside, if you want to just from a day perspective, man, way off yesterday's low. I mean, you're $7-8 from yesterday's low. So finding a place to buy it on the dip, I don't know. You may have to get out ahead of 708.82. And if you don't want the mark, which is the all-time closing high mark, so I'm going to call this 719.70, call 720. That's a big level moving forward too. Forget about the double top at 725, but let's see if 700 support holds or if the big boys are looking to wiggle out at 720.
And the last one, Amazon. So we've got, if I go and
Wow,
look this up here, Amazon getting downgraded at Wells Fargo to equal weight. TD, multiple analysts also, but Mizuho coming out, they reiterate their outperform. TD Cowen also reiterates their buy rating. So I have two analysts that are still bullish Amazon. Wells Fargo downgrading again, same story. Amazon downgrade is going to take the weight over, a couple reiterations there. I'm still long Amazon, the long-term portfolio. I have it in my own account. I have my wife's account. Long Amazon, no intentions to sell it anytime soon.
I think for this one, this is a little bit easier of a technical call because you got up to 195 and you had a little break here down to 181. So got to get back to this 188 area. That's a ways away. Recent low of the move, you're closer to that at 181.24, but no multiple lows, or I guess there's a pair of highs in the same area at 186, but that's a ways away. So I don't know. I mean, analysts it was a good Q3. You're coming into earnings season. Who knows how these inflation numbers are going to come out, later in the week. With the information we got on Friday, maybe like this relentless cutting of interest rates is not on the horizon. So, I mean, at least they're not, some of them are coming telling you, hey, you got to get long here. So I got to respect a little bit of taking some money off the table, downgrades here, but nothing to head for the hills over.
Yeah, it looks like kind of the common theme on analysts right now is that they're getting a little bit cautious on big tech as we head into the new week here. All right, well, I see our guest just popped backstage. So if Jeremy Schwartz is ready, gives me a thumbs up or something, he's ready to go. There it is. Let's go ahead and bring Mr. Schwartz on PreMarket Prep.
All right, Mr. Jeremy Schwartz, Chief Investment Officer over there at Wisdom Tree. Jeremy, how you doing today?
Maybe
Jeremy,
on mute.
On mute maybe, or?
Just hang on. We'll try to figure it out. Can you hear us? Can you hear us, Jeremy? You can hear us. He hears us well. For whatever reason, he wasn't.
It doesn't look like he's on.
Let's see how we do it now.
We gotcha. We gotcha.
Change the mic settings. Sorry.
No problem at all.
All right, the other Jeremy over there at Wisdom Tree, the one we get on the show. Jeremy, how you doing today?
Great to see you guys. Good. Hope you're ready for a good week.
Yeah, we got some action with the inflation data coming out later in the week. But interest rates, we certain focus before ahead of the inflation data and earnings. We got a Friday jobs report. I mean, the R word, the recession word, not eminent here. Why don't you give us your top-down take on Friday's job reports and the future course of interest rates?
Yeah, we've been calling for the Fed to really get more aggressive cutting. We were worried that they were, their path is to be very slow and deliberate, and they don't like to move things around as quickly as our economist would do. Professor Eagle talks about they're sort of so anchored at the short rate, and the long rate has all this volatility where they should actually do things in the reverse. And so, there's no reason why they should be so restrictive today. We think they should be closer to 3.5% as where they are. But, so the faster they get down to that, we think the better for the economy and sort of lowering the risk. Everybody celebrated Friday as very, very good news. One of the things that people often miss is hours worked, ticks down 1/10 of an hour, which is 0.3% on 150 million workers. That offsets the way how many more workers you get, and so that hours work ticking down was not a overly positive scenario. That's been trending down also. So it was not 100% as green, great as the headlines read out on Friday, but it's in some ways it's positive. The Fed, they definitely surprised with the 50. It goes back to, hey, they should have done it in July. They should have been moving sooner. And we do think they're still on track to keep cutting, to basically to that 3.5% level by next summer. Now we would do it sooner, but it's definitely the right path, and that gives you, even with that very good number, it's I think partly why the market did so well is, hey, the Fed's on track to cutting. They recognize it, and had they only gone 25, they might have had a different reaction on Friday, because then it would have been fears that they're going to go even slower. And but because they started with the 50, I think that's partly why you got a very good response Friday.
What's the bond market and the TLT trying to tell us?
Well, we had, it's fascinating. It goes back to lowering the probability of a recession. They got the 10-year got down to 3.5%, which was a real pessimistic view that the Fed was going to, really cause the recession by staying too tight for too long. And now you've gone from 3.5 to 4. And we had been saying 4 to 5 is actually where it should settle. This inverted yield curve is not something that's natural. You shouldn't have the Fed funds at 5 and the 10-year at 4. You should actually have a positively sloped yield curve. And so we think when the Fed does get you down to 3.5 to 4%, you'd have the 10-year at 4 to 5. And you've got, as we go through the election season, nobody's talking about reducing the debt and the deficits. Those things are staying with you for some time. And so it's really, to get the 10-year moving back to 3.5 and below, you really do have to have a view there's a recession, and the Fed starting to embark on the cutting path is lowering that probability. So that bond move is not surprising. A lot of people are saying, oh, now that the Fed's cutting, we got to lock in rates and extend maturities. That was exactly the wrong move. And still, you could get 5% by staying short term. Why go out and take the extra maturity? Now, of course, they're cutting and they're bringing those rates down. But if there's actually a risk, it's potentially that they go slower. And so actually, that's, again, staying short duration might be a better hedge than actually going to buy the long bond.
Yeah. Now, does this affect, again, when we see the TLT and we see bonds moving down here, I think, well, obviously that probably puts pressure on bond-like stocks, and there's a few of them, and obviously you can look at consumer staples that kind of trade bond-like to a certain extent, utilities to a certain extent, but maybe they're buffered by the AI story there. Does this, present an opportunity in some of these stocks here, or do you just stay away from anything that's, bond-like at this point in time?
I mean, it's fascinating, when you see the sectors that are leading the markets this year, and utilities is now your number one sector on the year, because it's like they've got this play on AI where we're going to need all this power center demand, but they also have this rate. And the last 6 months, they've been up 27%. It's amazing.
That's crazy. Wow, what a move.
Yeah, 3 months is up 20%. You're definitely seeing the 3-month rotation where, tech and comms are basically negative and flat. So the S&P last 3 months is up like 3%, and you've got the most tech-oriented sectors down, but you got utilities, real estate, industrials, staples, healthcare, all the more, like what you're saying, the bond proxies, the high dividend type stocks have actually done quite well in the last 3 months. I still think, when you look at where's the market and where are multiples, the S&P is now 22.5 forward numbers from what I look at my daily valuation report. You've got basically non-tech at 20 times, and you've got tech at 29 times. Now, it's interesting. Basically, when you look at their forward earnings curve expectations, the tech sector is basically 50% higher expected growth, and they got a 50% higher multiple. So it's like 1 for 1. It's fully supported by the above average earnings growth estimates. It's just that if they don't deliver, there's more downside risk in the higher multiple, and so there's less expectations in the lower multiples. But I think some of the value segments are 13 to 14 times, depending on how you select the universe. So I do think that's probably a place where is actually still reasonable now, given that the Fed, again, lowering the probability of recession. It's good for things that are priced for a recession, which at 13 to 14 times, you'd say a lot of those small cap places are that type. But again, as we start earnings season, large caps are expected to grow. If you just the Russell 1000 versus Russell 2000, the earnings of the Russell 1000 are expected to grow 4% this quarter. The small caps are expected to decline 4% this quarter. So it's still, why are the small caps at such low multiple? Well, they're not. The earnings environment hasn't been there. Now people are expecting that to turn around, and the cost of debt is 2% higher for small caps and large caps because they were the ones paying the floating rates of interest from the Fed. So as they bring that down, that should also help that. So I do think that's what you're looking for next year is these earnings to get better and reward those smaller companies.
Jeremy, what about this China trade? Because this has been nothing short of incredible. The comeback here in these stocks, I almost feel is unprecedented. I don't remember a 30% rally in a week in China for a long time. And I've been trading 24 years. I'm sure it's happened in there, maybe during one of the crisis situations like the financial crisis or something. But just just boom, like they come out, a little bit of stimulation happening over there for their stocks, and bang, 30% a week. Is this sustainable? Is this a real turnaround story? Or is this just another one of those rug pull situations where they rally for a few weeks and then they pull the rug out and they, harpoon their own stock somehow from a geopolitical perspective? What are your thoughts on the recent China rally?
Now, you could say it's mentality is like I'm about to relay. That's why they're where they are. But I do think it's a tough place to be a strategic long-term investor. Now this community might be able to quick move in and out and ride these trends. If you have a more trading oriented mindset, and you can get in and get out. Will there be a meaningful sentiment change? I mean, certainly you got Tepper going on CNBC, say buying everything, and again, he's a very nimble investor, so he could be in and they could be out quickly. You don't know how long he'll be in the trade for. They certainly are, depressed. BABA was like the premier growth stock when you saw it going back to 300. It was, it was competing. All those China tech companies were competing with U.S. tech leaders and actually outperforming them for a while. And then they had self-inflicted wounds where they started talking about common prosperity, and the Chinese leaders were taking actions against them. They were going to have, the Alibaba's fintech arm go public. They clamped that down. There's all these questions. Where's Jack Ma? All that stuff. I believe as a long-term play, I'd rather actually be in India and Japan. I mean, both for different reasons. Japan is much cheaper as a value market, has a play on Asia global growth. India is that long-term consumer best growth profile around, be there for decades. So India is where I really want to be over the long term. It's priced that way. And so it's not a cheap market, but it's what I want to be over the long run. China is, we're not overly positive the stimulus will change their economy. We think that they're trying to reverse the extreme pessimism, but they've got challenges, both from an economic standpoint, geopolitical standpoint. There's a lot of uncertainty over the next few years. So I'm not chasing this trend. I'd rather probably lighten even on that move. What are you guys? Are you all following?
We got a little bit of technical difficulties.
Yeah, sorry about that,
in
Jeremy.
the background, and he's green, so
my camera wasn't working this morning, and now it's harder for me to tell when I was on mute. And I was trying to talk to you earlier, but going back to what you were talking about with the the yield curve uninverting here and normalizing, I've seen a lot of people try to make bearish arguments because of that, but at the same time the yield curve is kind of normalizing here and becoming uninverted. What do you think people that are still bearish on the market or bearish about the economy, what do they want to see right now? Is it just for inflation to continue falling without a big drop in employment, or why do you think some people are still so bearish on this market?
Well, the inverted yield curve is it is interesting, and you would still say it's inverted today with the 5% Fed funds and the 10-year at 4. A lot of people look at the 2-10-year, and there's all sorts of different parts of that spectrum you can try to say, is it inverted, uninverted, but the short rate being the Fed funds versus the 10-year still very inverted. Now, say every time in the past it's caused a recession, how can you really get through this cycle without causing the recession? And what we'd say is, usually the Fed has to raise rates so aggressively to bring inflation expectations down that they do end up crashing the economy. With COVID and the pandemic, a lot of it was viewed as a one-off. So the long-term inflation expectations really were kind of anchored, and they weren't viewed as being, we sort of poke fun at Powell for calling it transitory, but people kind of viewed the inflation pandemic as transitory, and it's coming down. Now, we would have been tightening way earlier, and we would be loosening much more aggressively now, but that they could avoid, that the long-term expectations were anchored, is how you could navigate this without causing the recession. So hopefully they're moving down just quickly enough, and they do it. Obviously for next year, tax policy is going to be a big subject. Our corporate tax rate's going up to 28%. If you got a Democratic sweep, that is to me one of the most negative potentials for the markets. You say, why is small caps again so cheap? Well, they are the ones paying the highest part of the taxes domestically. So if there's a move up in tax rates of 20%, it would hit large caps by about 5% on our numbers, 7% for small caps. And so that is one of those relative headwinds if there's a big increase in corporate taxes. But the recession is possible to avoid it if they bring down rates fast enough.
Yeah, and I think it's just a very interesting environment, especially looking at those yield curves, what's going on there. And then Jeremy, kind of zooming out here, just looking at the valuation of the total market as the rates come lower, it's reasonable to assume that valuations will continue to expand. What does that mean for long-term investors? Like, should I feel comfortable continuing to add to my, 401k and stuff up here at these levels?
Well, the question comes back to, like, what is the alternative? And, when we look at the S&P at 22.5 times earnings, that's a little bit below a 5% earnings yield, upper fours. You add 2 to 3% inflation. So we look at that earnings yield which is the inverse of the P ratio for the whole market. It's hard to do for a single company or even sectors, but if you do it for the whole market, there's a lot of evidence that earnings yield is very much tied to the long-term expected returns. And so we would say 5% real, a little bit below that, 470 maybe, is what you could expect. And then you add 2 to 3% inflation. So now you're talking, 7% nominal returns. But even if you took 5%, just to make the math easier, we learned the rule of 72. How long does it take you to double your money? Well, 5% takes you to double your money 14 years, your purchasing power of your money after inflation. Well, if you look at the bond rates at 2%, it's going to take you 36 years to double your money in bonds. The TIPS yield is 2% effectively, with the 10-year at 4%. And so it's 35 versus 14. You're still much better in stocks versus bonds. Now, in the short run, all sorts of things can happen. I've been talking about commodities being an unloved segment, that, as you think about what are the things going on in the Middle East, as we're on the 1-year anniversary of October 7th, oil's had been trending down. Last week was a big week for oil on some of the escalated fighting. But commodities in general, I think, are one of those other inflation hedges that, if you said, all right, we think stocks are the ultimate real asset, they grow with inflation, earnings grow with inflation over time. But commodities also are a risk for inflation. If commodity prices soar, that could feed into the inflationary dynamics. And so I think that's been an underallocated to thing. Gold, as you're showing, interestingly, as it's been moving higher, there's been no flows in our world, in the ETF world. It's interesting. Bitcoin was driven by ETF flows. Gold has not been driven by ETF flows. It's been driven by central bank buying. There's been no love for gold. So I think that's another one that's been underallocated to. Now, I think stocks have a better long-term return, but in the short run, I think commodities offer an interesting portfolio hedge.
Jeremy, I want to ask you about that crude real quick, because the move that we've just had, right, is just in the last few days with the escalated tensions. That's not going to show up in the September data, right? I mean, where do you see the lead? I mean, there are all other commodities and stuff, but you could have a benign inflation CPI and PPI number on Wednesday and Thursday, but how much of that, is really being reflected in the short-term price action?
Well, you see it. The long-term trend has still been down. I mean, you see from it was much high. It was higher in April, and the general trend has been down. So I think, and even just the general broad commodity indexes, the trend has been generally down.
Okay.
So I think, and there's obviously two sides of every market. Some people think this thing, you saw headlines last week, should go to 50. Some people saying on escalated war go 200. I just think it's a useful hedge to that. This is one of those key risks that if this went much higher, that is an overall risk for both the Fed, a risk for the world with all the geopolitics. So I think it's been underallocated to in portfolios.
Jeremy Schwartz, Global Chief Investment Officer at Wisdom Tree Funds, joining us here on PreMarket Prep, giving us a great fundamental look at the markets. Jeremy, enjoy it. We'll be dialing you up next month. We'll have a few things to talk about after the election. We look forward to having you on again soon.
Thanks, Drill. Thanks, Dennis.
Alrighty.
How you doing, AB? You look kind of green. You not feeling well this morning?
I'm still feeling green.
Mr. Joel, we allow. You got the jokes.
I'm still trying to figure out the camera. By tomorrow morning, it will be fixed. Thank you to the people who have stuck with us through the technical difficulties this morning. Got about 10 minutes left of the show. Joel, you want to talk some lithium stocks?
Yeah. Well, we had a rumor, and looks like the rumor maybe is coming to fruition here. Let's talk about ALTM.
Yeah, so I'm actually long this stock in my long-term portfolio. It has been just an epic dog. I'm averaged in from about $8, so it's a huge loser for me. It was a winner at one time. I just kind of had the lithium EV thing and went up, and I kind of rode it all the way up and rode it all the way down, which is not the way you want to do things. But sometimes in long-term investing account, you're like, let it be there. And that makes me think I just should trade everything more often. So the rumor was on Friday that Rio Tinto was thinking about, looking at a lithium stock. And there was two stocks rumored, Albemarle, ALB, and ALTM. So we had more clarity on Friday night. Friday night they came out and it was confirmed that RIO was indeed looking at ALTM. And I don't know if they're looking at ALB, but it doesn't sound like they're looking at ALB. And that's why you're seeing Albemarle trade down just a little bit. ALTM is exploding higher on this because they're saying if a deal happens, it could be between $4 and $6 billion. The current market cap has now shot up to the lower end of that. So it's up 35%. There's 1.075 billion shares outstanding. So if you do the quick math on 4.17 price, you got about 4.5 billion. So they're pricing in that, maybe this deal is imminent and maybe it gets done in the $5 billion range. Least risk arbs are looking at that. So I have already sold a little bit. I may ring the register entirely on this, take the loss and move on. I don't know if maybe it's going to go out at 5 or 6 billion, but it's a big pop. It is just a rumor. So my intentions here are to probably sell into this rally.
All right, and now you mentioned ALB, the other potential candidate. That's trading down $1, much bigger company. Had a nice breakout, on Friday, but now giving a little bit back. But
so
when there's
probably not. Just to clarify, it looks like they're probably not looking at Albemarle. Right. They're looking, unless they plan on buying two of these things. It looks like ALB is not the target, so ALTM does look like it is the target.
Well, the enthusiasm for Friday really hasn't been tempered as much. 98.40 is your low, and that created a $3.40 gap. So we'll see. I mean, right now, the Bears are they got it down $1, but well off yesterday's low. Good number on the upside if you think it's a hogwash that that this is going to be involved in any kind of things. is good. The high and the close are right by each other, 102.09 and 102.10.
All right.
SRRK. I know you're green in the background here, AB. So I don't know when you're going to go either. $7.42 stock went out as. It is up 234% here this morning. It's good jug news, obviously, here. Just bringing it up. SRRK. I know Adam Fierstein was just tweeting about it as well. Reports. I wish you were doing this, AB, because I can't say the names of these things either.
Wow.
Reports. Apite Gromad meets primary endpoint in phase 3 Sapphire study in patients with spinal muscular dystrophy, spinal muscular atrophy. So that is the reason for this pop. Meets the primary endpoint. Stock is moving big time this morning. It is your big winner, up 233%. Wow.
Wow. No one had the memo on this one because the stock was trading near its low of the move. Technicals are hard to do, but $34.99, you're $10 off that high that you made earlier this morning. So if you have intermediate levels between then go ahead and pick them. I'm not going to say it's not going back there and make a statement like I'll walk down on my hands on the lodge of the office, but you've leaked $9 off there, and man, all the people have been stuck in this stock for the entire year. You're even above that, 21.17. Everyone that's been stuck in this stock since January of 22. And if you say, if it just gets to 25, if it just gets to, well, that's where it is. So trade at your own discretion.
AB?
Yep. All right. Keeping it ticking. Should we go back to ratings land? Some other ratings
Sure.
coming in this morning. So I saw one on Nvidia. There was an analyst calling on Nvidia as well. So we did Amazon, we did Netflix. I think Nvidia, let's see, what was it? Schwab. No, that wasn't Nvidia.
Okay, I'll take over here just for a second because I know you're struggling on the computer there too. So there's a lot of ratings. American Express. This is like ratings day. I don't know what's going on. The analysts all came out of their slumber. JP Morgan is downgrading American Express to neutral. Goldman's raising their price target on American Express. So they're fighting them a little bit. But again, the downgrade takes precedence over just a price target raise. American Express, which was sitting up here at an all-time high on Friday. So this is a completely contrarian call from JP Morgan. It's a take the profit and run because they had an overweight on it. It's hit their price target. And now they just think, if I'm reading from the note, even neutral rating on AXP. We continue to view AXP as a relative safe haven from deteriorating labor markets with attractive near-term growth prospects. I believe this is fully reflected in the current multiple, which limits outperformance. So it's a valuation call. They're saying it's run enough. They're ringing the register on AXP.
Old resistance was just above 270. You had 4 highs in the same area, 271.5, 272. That's where the bulls have to step up here and catch a bid. Yesterday's low, 270. I just wanted to mention, I know you didn't talk about Visa, but Visa, the old DOJ, we're coming after you. You're ripping everybody off. Well, that sell-off lasted 2 days, and you got a little bit of a rebound. So selling into those news events is not always prudent, but a nice rebound here in Visa. And did you go over the Nvidia rating or not?
I can't. So it says on the CNBC article, it says here are Monday's biggest analyst calls: Nvidia, Apple, Amazon.
No, I don't see anything on Nvidia. That's CNBC for you. It's not one of the big calls.
But there is one on Gilead from Wells Fargo.
I just want to say, Nvidia, keep your head on a swivel here at 125. You had yesterday's high, 125.04. The 2-day high, just a little bit above that, but that's just like a nice round number. So if you're looking through big follow through Nvidia, you got to get through yesterday's high, 125.04.
There you go. And then in Gilead, Wells Fargo buy rating, Gilead got, so that is up 61 cents this morning. I don't see the actual price target there, but
$100
$100 price target's at $85 right now. So yeah, there's been a lot of headlines this morning in biotech land.
Yeah, but just ratings, just a lot of ratings here today. If I'm just looking, at my summary here, and I got a big summary here, I think last time I looked, there was 21 upgrades and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, about 17 downgrades. It's a huge day for analyst ratings. I mean, and again, American Express, Gilead is one that's been in the doldrums for a long time here. Again, this was a COVID darling. They were coming out and and it had the big pop, and then it had the hangover from obviously the pandemic ended. It's come all the way back up here now, though, Gilead, Joel. It's been on the comeback trail for a while.
Yeah, the top of the trading range. You haven't been near $89. So if you're looking for a good target on the outside, you peaked in mid 16 at 89. Also in late 22, you peaked at 89. And then just from like a longer term perspective, when you're looking at it was so choppy and so range bound, right? No really inconsistency in the monthly candles. But look what you got when you had two red candles in April and May, but you finally got that green candle in June. And if you hopped on that first green candle in a slow moving stock, you're looking pretty here. So nice. I had not looked at this in a while. So no, it may take a while. It'll grind its way up there, but 89 major resistance in GILD.
All right.
Garmin downgraded to sell. If you can hear me, Garmin, I want to talk GRMN, downgraded to underweight at Morgan Stanley. The stock is one of the biggest losers here from ratings land here today. It is trading down 5.5% on this rating. So again, I've traded ratings for 20 years, so I get a pretty good feel for it. Garmin's like a mid-cap name. When you get a downgrade to sell on something like that, they're going to hammer it. And it's just because, one, it doesn't have as much coverage, and two, you don't see a lot of underweights or sells. So when you're downgraded to underweight, they're going to hit the stock. It was closed at $170.03. Is offered down at $162. Last trade's $169.99. So basically 161 down 9.
If you think it's going to give back all this move since May, well, see what happens at 158.80, really up to 160. After you had that initial surge in May, the buyers were very, very patient for almost a 2-week period. And now you're here. You're at 175 just to start last week, and now you're back under 160. So the bulls have an identifiable level here to step up for support. 8,600 shares are traded, not a big amount, but keep an eye on that potential support area in Garmin.
All right, well, that brings us right to about 9 a.m. Are there any, Dennis, any big stocks ratings that we missed this morning? We hit all the big headlines, I think, from over the weekend and last Friday.
Yeah, I think it's going to be one of those days where you're going to see rotation happen. Don't forget the Robotaxi event is on Thursday here. So that's going to be, in discussions here as well. Tesla is up slightly ahead of that. It wouldn't surprise me if the stock shows strength. I mean, it's showing great relative strength this morning because the world of tech is down, but Tesla is trading in the green. So the reason for that obviously is, people getting ahead of the Robotaxi event. There's lots to think about here. I mean, with the Tesla situation, is it, going to be one of those events because historically they run up ahead of it and sell off after? Is this going to be another one of those disappointments? Is this going to be a launching pad? Some of the Tesla bulls think they're going to come out with some really cool stuff, and it's going to be, one of those events that actually the stock rallies on. It's going to be hard to say. I don't know any of that. I'm just in it for the long-term story here. So I'm probably sticking with it. I'm definitely sticking with most of it. I didn't know if I was going to lighten up into it or not. I haven't lightened up any shares yet, though.
Cover of Barron's, Dennis. Cover of Barron's.
Tesla?
The Tesla
What did it
turnaround.
The Tesla turnaround? Is that what it says? Is that the title?
Well, it says...
Is it bullish or bearish?
I thought it was bullish.
Really?
I thought, yeah. I mean, they gave you little bears. Actually, I got last week's. The other one's up on the upstairs. But it said although he has under-delivered on his promises, because he said robo-taxes in 2016, 17, that eventually, he does get his thing. So that's what Barron said. I just want to alert our traders, investors that between 1 p.m. today and 6:30 tonight, you have 4 Fed speakers. So that's always going to be fun. No major earnings tomorrow morning except for Pepsi, an old stodgy stock. And tomorrow's T3 Tuesday. I'm not sure. Did we get the memo? Who's coming on tomorrow? But
It's going to be Christian Tharp.
good old Christian.
Christian's
We'll talk to him about technicals. So
They're all good. I love those T3 guys. They're all good.
Yeah, it's all T3 Tuesday is one of my favorite days of the week here on Pre-Market Prep. Make sure to come back tomorrow, 8 a.m. After this, we will have live trading starting up, of course, with Ryan Faluna and crew. So with that, I think that'll be a wrap on today's show. Thank you to everyone.
We did get Lucid numbers just now. Just if
Oh.
you're trading these $3 stocks here, they produced 1,800 EVs in Q3, delivered 2,781. I don't know where the expectations were. The stock is trading exactly flat right now. Just popped a little bit on those numbers here, and now it's starting to drop back down here. So Lucid numbers are out if you like those $3 EV stocks.
All right, guys, we'll be back tomorrow. Again, T3 Tuesday. Come back 8 a.m. live trading after this. With that, we will see you guys tomorrow. Stay green like I have been today, and take care.